Guys, we are in a crisis.
Okay, it's happening. Everybody stay calm. What's the procedure, everyone?
The US banks are collapsing.
Silicon Valley Bank collapsed on Friday.
The collapse of Silicon Valley Bank is causing shockwaves across the entire business world.
To Silicon Valley Bank, the second biggest bank collapse in U.S. history.
And in the last 24 hours, many founders, investors that I've talked to have been desperately trying to get their money out.
SVB. It is the epicenter of tech startups, venture capital, Silicon Valley Bank.
Our banking system is in a fundamentally different place than it was, a decade ago.
Banks are fascinating institutions. I mean, they use money that is not even theirs to make more money. Extraordinary, right? They're so important that an entire economy's health depends on them. But every once in a while, they show us how stupid and greedy they can be. You would have probably heard about the fall of Silicon Valley Bank, or SVB. This is no ordinary collapse. The bank's value fell by 60% in the first 48 hours. It is the second biggest fall of a US bank ever. This was followed by the third biggest collapse ever, the collapse of Signature Bank. And all of this happened in a matter of days. But these incidents are a symptom of a deeper condition plaguing the world economy for the past few years. Many wonder if this disaster is just the beginning of a domino effect that could mirror the horrible 2008 economic collapse. So, why did these banks fall in the first place? How is it going to affect the economy? Are customer deposits in danger? And is this just the beginning? Buckle up, because the story that I'm about to tell you will blow your mind.
Americans can have confidence that the banking system is safe.
What? Bro, what are you talking about, man?
So let's focus on the Silicon Valley Bank. This bank was one of the big names in the tech startup space. In fact, it was beloved by startups to park money. Now, the pandemic sparked a crazy tech boom. All of us became utterly technology dependent. I mean, a family of 5 have 8 laptops now. So, startups were cropping up all over the place. Looking at the potential, venture capitalists jumped in and started throwing money by the boatloads, and the US government encouraged it to boost the economy struck by the pandemic. Any guy with a techie brain and a cool story attracted investments. It was crazy. Okay, these startups borrowed and earned millions of dollars, right? And they needed a place to deposit them. So, Silicon Valley Bank opened its warm arms and welcomed all of it. In fact, their interest rates for deposits were among the highest in the country. Therefore, their deposits grew from 60 billion in 2020 to 200 billion by 2022. They were just prospering.
Here comes the money.
Here we go. Money talk.
Here comes the money.
Now, banks just can't go to bed in peace with money in their hands. They have to either lend it or invest it. And SVB chose to invest it. Amazingly, they didn't select risky investments like crypto or NFT. But at the same time, they didn't make the safest bets either. They invested most of their deposits in long-term treasury bonds and 10-year mortgage-backed securities. These were offering 1.5% return as opposed to short-term treasury bills that were offering about 0.25%. Now, all of these are debt instruments that give you stable interest on maturity. Now, I know they look like peanut-sized profits, but at least it's the safest, right? After all, it's backed by the government. Well, not all are quite safe. You see, there is a very crucial difference between 2-year bonds and, say, 20-year bonds. Long-term assets pose critical challenges in this case. Let's quickly see what they are. Firstly, startups can demand their money whenever they want, but if the bank invests most of it in long-term assets, then giving back the deposits becomes a problem because they can't convert it into cash in time. It is hard to sell long-term investments when you're trying to meet short-term needs, right? Although all banks do it, SVB went overboard and invested most of their deposits in it. The other problem is that bond prices and yields move in opposite direction. How? Well, here's the story. Let's say you buy a bond for $100 that gives you a yield of 1%. After a year, the government plans to increase the interest rate of bonds to 1.5%. And your friend buys those new bonds. Suddenly, the bond that you have becomes less favorable, right? Now, you can't sell your bond for the same $100 because there is a better product with higher returns. So, your bond's price goes down for you to sell it. And sadly, long-term bonds are actually more sensitive to interest rate hikes. And this is where the Federal Reserve came and did its part of the damage. We all know the Federal Reserve has been hiking rates like crazy in the last few years to fight inflation, which is the highest in the decades. Since 2022, the Fed has raised interest rates by 450 basis points. It currently stands at 4.58%.
That was the plan. Not a great plan.
This hike has brought down the asset value of Silicon Valley Bank. Okay, even then, this is actually not a huge issue because the bank can wait for the value to go up again. But they sold all their bonds. Why? Well, you see, last year was awful for the tech sector. The venture capitalists who poured money for them just closed the door and started investing in government bonds due to their high interest rates. They started asking about profits to the startups, which, let's be honest, they were not making. The tech craze was cooling down. So all the startups naturally turned to their deposits with Silicon Valley Bank to sustain their business. And that, ladies and gentlemen, was the beginning of the end. As customers asked for their money, SVB had to sell $21 billion in long-term assets. And since it was a long-term asset, they had to face huge costs in liquidating it. So they lost $1.8 billion on the sale. But they tried to raise more than $2 billion in equity to cover those losses and show to the outside world that all was fine. But by that time, depositors started to sense that something was fishy. Around the same time, Silvergate Bank, a crypto player, collapsed due to the same issues. And once the cat was out of the bag, the panic horn was blown. Investors and companies flocked to Silicon Valley Bank to pull out their money.
Give it back! Give me back the money!
This is what's called a bank run, when people lose their mind and go to banks to take out their money. And the bigger issue is, as per the rules in US, only up to $250,000 of a person's bank deposit is insured. And startups have millions of dollars in SVB. To be precise, guys, 85% of deposits are not insured.
What?
So, startups who are waiting to pay employees, investors, suppliers, and lenders are all in jeopardy. It could take months or maybe years for the Federal Deposit Insurance Corporation to sell the assets and pay back the deposits. There is also a possibility that this sets off a bank run in other banks. You know, if people start thinking, oh no, are all banks mishandling my money? I need to go and take it out. And it's been reported that 186 banks are at risk, similar to that of Silicon Valley Bank. And if bank run happens in all of those banks, well, to put it mildly, it's financial Armageddon. It could be 2008 all over again. So, whose fault is all this? For starters, SVB needs an award for zero risk management. The bank didn't even have a chief risk officer for 8 months last year. They seem to be the only ones blind and deaf to the increasing interest rates that everyone except them was aware of. They could have taken early steps and liquidate their assets, but, well, they did not. But the deeper problem here is how the Federal Reserve is handling inflation. Now, I understand that they are the ones with the black suits and the financial jargon, but the reality is that their aggressive measures will probably cost the economy. And balance sheets of Silicon Valley and others were hardly a secret. They could have just, looked. Anyways, this is still a developing story. This could turn out to be nothing or explode into a nightmare. Let's hope we sail through this somehow. I hope you enjoyed the video and found it useful. If you did, make sure to hit the like and the subscribe button, and I will see you all in the next one. Peace.